Okay, welcome to Halftime Report. I'm Anuj, with me, Sonia and Mangalam. And of course, we are looking at a market where we had a bit of a gap up and then the market cooled off. And now the market's picking up pace once again. Just keep an eye on the Nifty Financial Services Index because that's the one where we have the weekly options expiry. And all of a sudden, there's quite a bit of traction that you're seeing in all these financial names. A lot of, these names are doing well. Names like HDFC Life, HDFC Bank, State Bank of India, Axis, all these names part of that financial Nifty. And the other stock that stands out really is Bharti Airtel. That's been one of the strongest stocks, so up about 2.5% on that. So good going for the market.
Oh, absolutely. Good going for the market, but all over the place, right? It's almost like a roller coaster ride. Now the market has recovered, but look at that. It's a full V-shaped, almost, V, U, whatever you want to call it. The market is recovering. And there's so much happening in the auto space. We're going to put focus on that, definitely. There are at least 5 new launches in the SUV sector in September alone. With the Citroën C3, the M&M XUV electric vehicle, you have the Toyota Hyryder. And someone's got to make tires for all those cars, right? So the tire sector doing very well too. We'll talk about that as well.
We'll talk about that in just a bit. But, Anuj, perhaps it's playing to the script. Last week's high on the Nifty could not be taken out in today's trading session. Yeah. We saw some selling. But today, we're seeing some support at the 20-day moving average, which is closer to that 17,600 mark.
I think, Mangalam, last week's gap, I think you're right. That almost got filled and then the market saw some correction, maybe because of that algo trade. But I think if today's high is taken out, then we are looking at some serious trend day. If we do that, because financials are coming back, I think that's the index to track, the Bank Nifty and the Nifty Financial Services Index. And that's been the theme for this market. And X of IT, this is a roaring bull market. If you exclude IT, most of the other sectoral indices are either at lifetime high or very close to lifetime high. You have the auto index, or the capital goods index, or the FMCG index, the consumption index. As I said, barring IT, most of the indices are at or close to lifetime high. So in some sense, there's clear, I know decoupling sounds a very sort of strong word, but you've got evidence of that all through the year. If you look at, yes, we also fall when US markets fall, but clearly the fall has been much less. Both month to date and year to date, the numbers are stark. So obviously there's clearly a domestic factor which is helping our market.
Okay, domestic money coming through, the consumption story picking up. But let's put focus on the steel sector. Now, as we all know, steel prices have been under pressure for a while. According to Motilal Oswal, the sector is bracing for a further correction in steel prices. Brij Bhushan Agarwal, the Vice Chairman and Managing Director at Shyam Metallics and Energy, joins us now to discuss the impact of that. Mr. Agarwal, good morning and thanks for joining in. The steel prices have been under pressure for a while. We understand that in September, the steel prices fell about 1,500 to 3,000 rupees per ton compared to the start of August. So that's a steep fall. Can you tell us on a blended basis, what is the reduction in steel prices that we've seen up until now and what is the expectation?
See, during the second quarter, all these steel commodity prices generally go with a correction because, it's a monsoon time and, there is a lot of issues of the waterlogging, logistic disruptions and all, slowdown in the construction activity because of rains and all. So I think 2,500-3,000 rupees ton is a very, very, normal thing which we have always seen in all the second quarter during this August-September because of the monsoon. But I would say on an average, if you see from the peak, I would say 7 to 8% in the long product, there had been a correction on the steel prices in the long product. And the demand of the long product is not that bad. I would say till now, we have not cut down the production. We are able to sell the material, but yes, there is a pressure of price. And I think, post-November, we will see the market getting firm. And also, I don't see any other corrections. I see this is a bottom out on the price side.
Quantify the kind of correction from, say the first quarter average realization to the second quarter so far. What has been the decline? And now that you're saying it's bottomed out, could you comment on the trajectory going forward?
See, if you see, there has been a major correction from the peak time. I mean to say, if you're talking from the peak time, it's almost second and the third quarter of the last year. But from the first quarter onwards, I would say there is a correction of around 3,000 to 4,000 rupees a ton. So, and since there is a lot of, prices on the raw material is not getting so much, uh, reduced. And today, I don't see that, like with the kind of demand what we are seeing in the long product, I don't see that the market is further going to correct.
So you said 3 to 4,000 rupees a ton is the fall that you've seen now compared to
The first quarter.
Q1. Okay, that's a lot. So what does it mean in terms of your EBITDA per ton? Because in Q1, your EBITDA per ton has fallen quite a bit. You're sitting at about 13,300. You were at one point in time almost at 19, 20,000. How much could it fall further?
See, on an average, like today we are talking of 3,500 ton is the September time. But if you see the average of the quarter, I think we should be able to see a correction of around maybe 11,500 to sum up on the EBITDA numbers.
So that's for the annual EBITDA per ton sort of guidance that you're talking about, because the first quarter you've done around 13,300.
Correct. I'm talking of the second quarter.
Second quarter, 11,000 to 11,500 per ton is the EBITDA. Thereafter, would you have any visibility, or you would wait for...
I don't see this is bottom out, I don't see, like, I see a market going upward only from here.
What makes you so optimistic? I mean, domestic demand, could you comment on that? Interest rates have risen, and exports, which is about 12% of your revenues, we saw a lot of problems there as well, European demand, etc. So could you give us a sense on demand of for both domestic and exports?
See, if you see the domain of Sham Metallic, it has been always majorly on the rural sector, and we know, like, a lot of development is going on in and around the country, a lot of, projects of the government, as well as, after the revival post-COVID, we are seeing a lot of demand is coming up in the private sector, real estate and other businesses also. And since it is not a product which we have to import, and the product where we, it's more governed on the market and the raw material prices. And we are domestically, I've always said, we are not dependent on the international raw material, like we are on the pit head, from the iron ore side, and we buy a lot of local coal from Coal India. So, in that way, maybe one quarter or maybe 1.5 quarter, we see some kind of margins going down because we have to carry over the inventory. But in the longer time, if we see that, it's a very, very sustainable EBITDA of 11,500, 12,000 rupees a ton, which we should be able to maintain it.
Okay, so sustainable EBITDA per ton is 11,500 to 12,000. That's much below what you've seen in Q1 of last year, and in Q4. So while there is margin pressure, there's EBITDA pressure. Let's talk a little bit more about demand. You did mention that demand for long steel products has gone up quite a bit. Would this mean that you are going in for any expansion plans and any capacity that you have coming on stream in the second half of the year?
We have already commissioned 500,000 ton of long product facilities. And as you know, we are penetrating more on B2C space. So, with a better marketing strategy on the B2C, the consistency and the reliability on the supply and the price both is, much better. And the new expansion, what we have done it is on the long product B2C businesses. And in the time to come, we are seeing this business to be very stable for a country like India.
Right. What's the capacity coming on stream in the second half? Is there any? And expansion plans, how much of money has been incurred so far? What's remaining?
See, out of our total capex of around less than 4,000 crores, around 1,900 crores have already been capitalized. And this year we expect to capitalize another 700 to 800 crores this year. And when we are talking from the plant side, yes, all the streams, what we have stated, the DRI facility, the specialty alloy, and the blast furnace, everything is going on as per stream. And we expect that, the palletization facility also, the new facility of 2.4 million ton, what we have stated that will be commissioning by August, September 23. We should be able to complete maybe by end of this financial year or maybe early financial year. Yeah.
Okay. Any buyback that's possible, because you are sitting on a net cash on your books? I think you have cash to the tune of about 500 crores. Planning a buyback anytime soon?
See, as on date, we are under the SEBI guideline that we have to dilute 25% stake. and we have done 11.5% in our IPO. So at present, there is no such scheme. First, we have to reform everything as per the SEBI guideline, and maybe with the time to come, once we are done with all of our regulations and all, we might think later on, but not at this point of time.
From the peak, we've seen a near 30% correction in the stock price. When will be a conducive time for you to dilute the stake further to 75%, as you said?
This is too early for me to state, because we have 1.5, 2 years still. And when the time will come, since this company is also not in the dire need of cash, all the new capex what we had planned is from the internal accruals. So maybe after 6 months or maybe a year time we might evaluate, but not at this point of time.
All right. And final question then, with regards to input prices, what was the blended price of coal in the first quarter? How did it pan out in the second quarter so far?
See, in comparison with the first quarter, we saw second quarter, I think, maybe around 1,500 to 2,000 rupees ton, the carbon prices will go up.
Okay, we will leave it at that. Thanks a lot for joining in and giving us an update. There was quite a bit of information that you've given us. That's Sham Metallics. They are seeing a lot of operational pressure actually. So from an average of around 11 to even 19,000 that they did EBITDA per ton, they're saying they're seeing some pressure and perhaps it won't go back to those levels anytime soon, and not looking at a buyback at the moment. But demand has definitely picked up for long steel products. Let's slip into a quick break on that note. A quick reminder for our viewers, it's that time of the year again. Money Control Pro's financial freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits on the Money Control app or the website. Welcome back to Halftime Report on CNBC TV18. Now, we have the spotlight on a few sectors. One of the sectors in focus today is the tyre stocks. Most of them are at fresh 52-week highs. You have CEAT, Apollo Tyres at fresh highs, and JK Tyres is just about 10% away from its 52-week highs. Now, why are these stocks rallying? The simple answer, of course, is that demand has come back in a big way from the auto OEMs. So you have a Morgan Stanley that put out a report this morning where they said that the tyre tonnage from OEMs, they are expecting it to rise by 10 to 11% compounded between FY21 to FY25. So that's one of the reasons. The other reason is there's higher sales of SUVs or sports utility vehicles and higher sales of commercial vehicles, and both are high margin products. So because of that, there will be a higher tonnage that will come through for tyre companies, and that will aid margins as well as support the revenue growth. That's the first reason. The second reason is that commodity prices are now turning positive, or turning supportive rather. Crude oil prices are now 20% lower than the peak that we saw in the month of June. Natural rubber prices are down 17% from the peak in November. And remember, both crude and natural rubber make up 70% of the raw material cost for these tyre companies. And the third reason is premiumization. Now, what's happening is that a lot of these tyre companies are focusing on premium tyres with special safety features, etc. For example, Apollo Tyres launched the Vredestein tyres in 2021, which is 40% costlier than an Apollo tyre. And in all the new cars, you see premium tyres, which means more business for names like Apollo, CEAT and JK Tyres, and hence that's why the stocks are surging. Finally, just wanted to take a quick look at the valuations. Most of them are trading in line with their historic valuations, but still stocks like MRF are on the more expensive side, 24 times forward, while names like JK Tyres are the cheapest amongst the lot.
All right, if we take that point, Sonia, thanks a lot for that. Meanwhile, just keep an eye out on the markets. We're seeing a surge once again. We have Reliance, which has moved to the high point of trade, and that's the one which is contributing the most in terms of gains in just the last few odd minutes. So there you have it, Reliance at the high point. And alongside that, Bharti Airtel, which has been doing well all through today's trading session, continues to hold fort with a gain of almost 2.6%. But from the broader markets, the hospital space in particular, Narayana Health will be in focus as they acquire Bangalore-based Shiva and Shiva Orthopedic Hospital for about 200 crores. Sonal joins in with details.
Well, that's right. The company, that is Narayan Rudralaya, has gone ahead and they have acquired Shiva and Shiva Orthopedics Hospital in Bengaluru at 200 crore rupees. This hospital being acquired is into orthopedic and trauma hospital. It has 100 operational beds, and in terms of revenues that the company did, 50 crore rupees in FY22, and for the 4 months till July of 2022 for financial year 23, they have done revenues of around 18 crore rupees. Going by that, looks like the valuation for this acquisition is 4 times price to sales, which looks like an expensive valuations. But yes, there are some triggers as well on this acquisition. It will help Narayana foray into trauma and orthopedic specialty, which is a new segment, and this is within the Narayana Health City campus, which houses 2 flagship hospitals, and the 2 flagship hospitals consist of Narayana Institute of Cardiac Services and Mazumdar Shaw Medical Center. Additionally, apart from this, company has signed agreement to subscribe to OCDs of Shiva and Shiva Orthopedic Hospital, which is optionally convertible debentures, and company will be subscribing to these OCDs worth 80 crore rupees, the closure of which is expected before 31st December 2022, and they will be redeemed after 4 years, and company has right to prepay part of full amount anytime during the term of 4 years by which this redemption is expected. So this stock remains in focus today.
Okay. Sonal, thanks a lot for that. Let's focus on what's happening in the gold loan financing markets in India. Lenders like Muthoot and Manappuram have seen quite a bit of loss in customers over the last few quarters as customers are shifting from NBFCs to banks. But a recent note by Bank of America suggests that gold financing growth may pick up in second half. Abhishek is here with more details. Abhishek?
As you mentioned, BOFA has written on Manappuram Finance, wherein they reinstate the buy recommendation with the target price of 130 per share. They expect an acceleration in terms of gold AM growth in H2 FY23, which is on account of the fact that economic improvement will be seen and higher financing needs will be seen for the business, despite competitive intensity that remains elevated in the gold financing sector. So in addition, their FY23 AM growth is expected at 10.5% by BOFA for Manappuram. That is on account of the fact that there will be pickup in the non-gold business as well, which is almost 1/3 of the portfolio. And growth in gold business will be led by the MFI subsidiary, that is Ashirvad, followed by RBI's relaxation that is seen in secured lending cap. So net interest margin will remain supported despite rate hardening, given the fact that there will be yield improvement on account of teaser rate portfolio, which will continue to decline. While asset quality remains, a key concern for investors in the MFI book, wherein the gross NPA ratio is at 7.7%. The credit cost should normalize over the next 3 to 4 quarters as restructured book, which is almost 10% of the MFI AUM, matures over the next 3 to 4 quarters. Back to you.
Okay, Abhishek, hang on. Tell us also about Paytm, right? They came out with a business update for the month of August. How did it look?
Well, for the month of August, the number of loans disbursed is close to 60 lakh, which is up 246% YOY and about 105% sequentially or month on month. So value of loans disbursed is around 4,517 crores, which is up almost 5 to 6 times on a YOY basis. The gross merchandise value is up 72% YOY, and monthly transacting users are up 41% YOY and about 1.3% month on month. So calculation shows that the gross merchandise value per MTU, or the average ticket size, is at 26,582, up about 22% YOY and about 96% on a month-on-month basis. Back to you.
All right, take that point, Abhishek. Thanks a lot for that. Broader markets doing very well now. Shoppers Stop is one of those stocks which has now come into the radar. It's crossed its 52-week high, up 7%, and most of the gains have come by in just the last few minutes. So there's a vertical spike that we're seeing on Shoppers Stop, and as we speak, volumes have also picked up. It's already crossed its average daily volume, and we're only through midday out here. So a big move on Shoppers Stop, the stock on at a fresh 52-week high. But sticking with some management commentary from the financial space, earlier today we spoke with Ramesh Iyer, who's the Vice Chairman and Managing Director at Mahindra & Mahindra Financial Services, to discuss their August business update.
Now, the disbursements have been good, collections have been good. Write-off is an outcome of our NPAs that we settle with the customer, either take back the vehicle and settle, or offer a settlement to the customer, and therefore the balance gets written off. So it is from the past NPAs which have been fully provided for, we take a call to write off. So it will have a contra from the provision coming down and moving towards write off. Also important to see the stage 2 coming down, which means the forward flow is not happening. Put this all together and you will kind of, reach the conclusion that the asset quality is actually improving month on month, and we would see this substantially change in the next 2 quarters as well.
All right, with that, let's take a short break. Come back on the other side. We'll get you more on the markets and individual stocks.
Welcome back. Well, the market's been quite strong. All dips are getting bought. Today, the market gave you a significant dip, actually. After opening higher, the market came down, and around 10:45 is when the dip came, and that has been bought. Not quite at the high point yet, but getting there. A lot of stocks doing well now. NTPC stands out in the last few minutes of trade. That's doing well. In the broader space, Tata Power stands out 4% higher. Balrampur Chini has made a big move today, actually. 4% higher on Balrampur Chini. Adani Enterprises, another move on that stocks. A lot of individual stocks doing well. Sachidanand Ottekar of Trade Bulls is now joining us on the show for a market check. Sachin, hi, good afternoon. Your view on the index now, I mean, after the kind of move that we've seen, and what are you buying and selling?
Good afternoon, Anuj, and rightly said, the recovery has been significant. In fact, we were expecting this particular support zone of around 17,580, which is the 5-day exponential moving average, to hold on. In fact, even if you look at the 30 minutes data, the cluster of supports at 5 and 20 exponential moving average have been working well for the last 3 trading sessions. So in the last 3 trading sessions, we have seen multiple inside bars formation on the daily scale within the significant price action that we saw last Tuesday. So this particular consolidation looks mature. We are expecting that this particular move should extend towards 17,860 going forward, and that's why we keep on recommending long positions here. The stop loss from here on, I think, should be placed at 17,630 when it comes to Nifty. So this particular rally, I think, which has started after the dip, I think this particular rally should continue further, and we may see a breakout getting established above 17,800 soon. When it comes to Bank Nifty, the range of 40,000 on the higher side and 39,530, which is the 5-day exponential moving average support, has held on well. If you look at the entire data shaping up right now, the expectation is that probably before this particular expiry, we may see a breakout above 40,000 cluster, and Bank Nifty 2 could swing towards 40,400. So even here, we are recommending long positions. The trading stop loss should be placed at 39,640.
Right. Sachi, your thoughts on individual stocks? We have seen a lot of them buzz around in today's trading session. And as we speak, actually, the advanced decline ratio for a brief period had fallen in favor of the declines, and now it's come back. The green and red lines, actually, we've seen the green line above it. Now 1,500 stocks in the green for 1,200 in the red.
Well, yes, the ratio has improved, and almost it is 50-50 right now. If you look at the financials, I think the focus should be there in SBI, which has been trending near its 52-week high. It has been well supported with a consistent addition of open interest in the last 3 trading sessions. So if you look at the weekly structure, we saw a very confident breakout at around 525 last week, and probably this is the follow-through action that we are witnessing here. A clear-cut, flag breakout on the intraday scale, exhibiting a target of around 560. So I think SBI should be on your radar. The trading position should be held on with a stop loss at 536 from here on. The second stock that we are recommending is SRF. Now again here the weekly structure has been really significant. Recently we saw a breakout from a weekly flag formation. In today's trading session, the stock started with an open low formation, which is a very significant observation on the intraday scale. We are expecting that this particular move to continue toward 2730. The pattern target is placed there. The stop loss from here on should be placed at 2630. And SRF can also be accumulated in your trading portfolio.
Okay, thanks a lot, Sachidanand, for joining in. Let's slip into a quick break on that note. Tata Motors has announced a slew of new products in the commercial vehicle segment. Excerpts from our conversation with Executive Director Girish Wagh coming up on the other side. Welcome back to Halftime Report on CNBC TV18. Now, Tata Motors announced a slew of new products in the commercial vehicle segment, which include new tippers, trucks, and a first for the Indian market, CNG trucks that are enabled with driver monitoring systems, collision mitigation, amongst other features. The CV maker is looking to expand its portfolio vastly, and to discuss the new product, and their unique selling points. Our colleague Sandhya had a chat with the Executive Director at Tata Motors, Girish Wagh. Listen in to what he had to say.
We are launching a range of trucks which is around 4 themes, and these are the 4 themes which are quite prominent in the country, and I'll explain one by one. But these 4 themes are safety, second is alternate fuel, third is infrastructure growth, and fourth is overall fuel efficiency improvement.
So talking about the existing products also, so Tata Motors recorded a 12% year-on-year sales in the month of August when we talk about the commercial vehicle space. So this was, while in the green, it was still lower as compared to, your competitors. So if you can help me understand that why exactly the pickup was comparatively slow, or, which segments are the ones where you need to focus more in order to make up for the, remaining space?
Yeah, so I think, at Tata Motors, we have been focusing on 2 things. One is a retail-driven approach, right? That means how do we improve our retail share? And I think the government has put the Vahan database of registration of vehicles, and that becomes a key monitorable for us. So that's something that we have been pushing. And the second agenda, if I may say, is also, growing profitably. It is true that, we have engaged McKinsey, not for the first time. I think, we have been engaging a few consultants to improve on various aspects of business.
So talking about that, Mr. Wagh, when it comes to whether it's the go-to-market strategy or the margins or the profits, Tata Motors is also looking to tackle those aspects. So will this also mean that we'll see lower discounts or maybe no discounts during the festive season? Is that a possibility?
I think discounting is there in the market, as I've been saying, and it is a function of demand versus supply, as also desirability of the products and what kind of service do we give. I think we at Tata Motors are focusing on improving the desirability of the products, and the step today that we have taken is absolutely in that direction. In addition to that, we continue to strengthen our service, which will therefore help the customers get more value from the products that they buy from us, right? And that should then finally translate into lowering the discount or having the premium.
Of course, the target is to grow profitably, but we're also talking about technology, and we are living in a world which is talking about electric vehicles. If we talk about India, last year, more than 3 lakh electric vehicles were sold in India. And we also already have electric buses. But when we talk about the trucks, especially the jumbo ones which we see on our highways, is because a lot has to be done in that area. So, is Tata Motors planning to launch a product on these lines?
So, as far as electrification is concerned, I think we are looking at all the usages, all the applications, and which one makes sense for electrification, right? So the work that we are doing on electrification is actually across the range and focused more towards those applications which will gain TCO parity faster.
Absolutely, and it will also require some support. If I talk about central government schemes like faster adoption and manufacturing of electric vehicles, large trucks were not included in that. Do you think that at present we lack the required government support and schemes in order to motivate the manufacturers, to come up with a line of electric trucks?
I think, as you rightly said, FAME, for example, has been a very good step, and that has led to a good penetration of EVs in buses, and followed by small commercial vehicles. And one has also seen a good push happening in both 3-wheelers and 2-wheelers, right? Now, apart from FAME, the government has also come up with a few more schemes. With the PLI is the notable amongst that. And that is not focused on any particular segment. So that's going to be across the segments. And I think that is something we believe is going to help this electrification transition within the country.
I have my last question for you, Mr. Wagh. So when you actually launched Tata Ace, at that time that was the vehicle which single-handedly defeated the recession which was there in the space of commercial vehicle at that time. Considering the current geopolitical scenario and the way they are impacting Indian market as well, more or less, any plans to launch something on those lines which will boost the sales in that space? And do you think the answer to that question is this series of trucks which we can see?
Absolutely. I think, what is certainly required is product innovation, right? ACE that you referred to. And I think as a company, we keep on tracking the customer and market trends. And basis that we keep on coming up with product ideas which should lead to a different level of performance in that particular segment, right? But in addition to this, we are also coming up with few other innovations Sampurna Seva is our bouquet of services, which also includes industry first uptime assurance or also a fuel efficiency management program. So this will also help us add value to the customer and increase our volumes.
All right, with that, we'll step to a short break, come back, get more on the markets and individual stocks. Welcome back. Let's shift to the new kid on the block. And I'm not talking about Vahishta, but I'm talking about a strong debut coming in for Dreamfolks Services. The company shares actually listed over a 40% premium and is now still holding with a 45% gain. Now let's go on to the new kid on the block, Vahishta, that is, Insight Edge. She gives us all of that. Vahishta.
Hi Mangalam, thanks for that. Well, Dreamfolks Services has made a blockbuster market debut today. It has been listed at 62% premium. It is India's largest airport service aggregator platform with an industry growth rate of approximately 40%, which is expected. The company has an estimated market share of approximately 95% in FY22, which means a dominant position in the industry. The IPO issue size was 562 crores and offer for sale with 33% dilution, which means that after the issue, the promoter holding would be at 67% and the public holding would be at 33%. The IPO saw strong traction from the investor community as a whole with a subscription of 57 times. The company also reported its Q1 numbers today, wherein the revenues have jumped by 6 times to 160 crores. Margins are at 12% and the PAT has turned profitable at 13 crores versus a loss of 1 crore in the same quarter of last year. We had the management on our channel earlier today, wherein they said that the company commissions 15% of lounge payments which is made by the customer. There is a reduction in the average gross profit per passenger from 138 in FY20, which was the pre-COVID times, to 128 rupees in FY22. The international business contribution at present is marginal, and the company is also venturing into railways lounges, and they hope to maintain similar margins from the railway segment as well.
Okay, thanks a lot for that. So there are still a lot of problems that the company is facing, right? Their gross profit per passenger has gone down, and receivable days are high, payable days are high. So some balance sheet stress is definitely there. But let's listen in to what the management had to say.
We have also integrated our systems with the airlines and the OTAs. So in case if anyone wants to even buy a lounge voucher, while booking the ticket, they can also do the same. So these are the differentiator what we have created in the market, and I think that is one of the biggest plus point. And not only that, we started as a lounge aggregator platform, but today we are an airport service aggregator platform. All the lounges have different pricing, okay? So if you actually see the metro city pricing is higher, the domestic lounges rates would be different to the international lounges. So on average, if I would say that if the pricing is around 100 rupees, what the banks or the card network would pay, we would keep around 15% and the rest we pay to the lounges. In terms of the margin, I would say that because of the volumes, the way it's increasing, that's how you would see the difference. But we have always maintained that, and we would continue to have the 15% margin for us. The EBITDA would remain at 12%. I'm talking about the gross margin which is there. So that is at 15%.
Right. With that, we take a short break. On the other side, a special segment comes by FinStreet. Abhishek will focus on the housing finance companies.
Well, growth is back in the loan books of housing finance companies in the first quarter of FY23. Abhishek is here to analyze how the segment has performed. Abhishek.
Well, in FinStreet today, let's focus on the growth that is coming back in terms of loan book across housing finance companies in the first quarter of FY23, despite seasonal effect. So growth has also come back on the fact that, Q4 FY22 was very strong, wherein the growth was about 4.2% quarter on quarter. Overall, the AUM was around 12.05 lakh crore, up about 11% YOY and about close to 2% sequentially. growth was seen for the likes of HDFC Limited, Canfin Homes, Aavas Fin, Home First Finance and Aptus Value on a sequential basis. Indiabulls Housing has also surprised by growing the book on a sequential basis, first time in many quarters. However, the laggards were PNB Housing Finance, wherein the growth declined both YOY and quarter-on-quarter, and for HUDCO as well, the loan book declined on a sequential basis. Let's take a look at the P&L performance. The strong loan growth has not translated into strong net interest income growth for many players. This was due to the fact that there was a rise in cost of funds in Q1 FY23. Many lenders have started to raise their rates in late Q1 FY23 and in Q2 FY23 so far. So the net interest income of the sector was around 8,450 crores, up about 5.5% YOY, but down about 0.75% sequentially. Talking about sequential NII growth, it was strong for the likes of Canfin Homes, Home First Finance and Aptus Value, while on a sequential basis, the NII growth was weak for Repco Home Finance, HDFC Limited, PNB Housing and LIC Housing Finance. Overall, the PAT of the HFCs was around 6,011 crores, up about close to 37% YOY and a decline of more than 7% sequentially. The sector also witnessed a decline in its gross NPA ratio, which came down from 2.98% to about 2.89%. On the other hand, the net NPA ratio has increased from 1.42% in the previous quarter to about 1.51% in Q1 FY23. So ICICI Securities estimates the stress or the gross NPA ratio of the housing finance sector to remain under control. So in the next 2 years, or improve from current levels in the next 2 years. In terms of outlook, the worst of stress asset woes are behind for majority of the players in HFC space. AUM growth has started to come back for the HFCs, and with repricing on the lending side, you can expect NII growth and net interest margin also to improve growing ahead. So most of the HFCs are well capitalized, which augurs well for growth ahead. Improvement in return ratios will lead to re-rating in their valuation multiples. Talking about valuation multiples, how does the valuation stack up? Let's take a look. Out of the 10 HFCs, 5 of them trade at a market cap of around 0.15x of their Q1 FY23 AUM. Aptus Value Housing trades at a higher multiple in terms of its AUM in Q1 FY23. So valuations have been based on two key metrics, growth and return ratios. Market cap to AUM ratio is the lowest for LIC Housing Finance, given that it has an ROA profile which is less than 1.5%. And across HFCs, the highest valuation is seen for Aptus Value, wherein the ROA is close to 8.9%. So the difference in valuation may also have been impacted by AUM growth that you saw from pre-COVID levels to now, wherein the growth have been the weakest for the likes of Indiabulls Housing, PNB Housing, while it has been strong for the likes of Home First Finance, Aavas Finance and Aptus Value.
All right, Abhishek, nicely explained there the future of housing finance companies right now, what happens from there. But just before we wrap up, important news coming at the bottom of your screen. Moody's has affirmed India's rating at Baa3, outlook stable, and I think it is good news.
Yeah. Well, I don't know if these agencies, these rating agencies, should be taken very seriously. They're generally behind the curve.
They are.
There's the only way to put it. But of course, positive news is always taken with both hands.
It is. On that note, we will wrap up on this edition of Halftime Report. Business Lunch comes up ahead.